Gold prices making new all-time highs, breaking through $2,600 an ounce and holding steady this Monday. Joining me to talk about this rally in gold. Is it sustainable? Will it go higher? Where does it go from here? Joining me today, Brien Lundin. He is the editor of the Gold Newsletter and the CEO of the New Orleans Investment Conference. Brien, so good to see you. Thanks for joining us this Monday.
Great to be with you as always, Daniela. And it is a wonderful bull market that we're seeing right now. I think its stealth characteristic is fading away as we speak. I think we're getting a lot more interest in the sector right now. So very exciting time to be talking with you.
Yeah, so just to put things in context, the metal is up over a little over 27% since the beginning of the year. How much impact did the Fed have on the recent rally? I mean, would you say it's all the Fed here?
Yeah, it is, but I don't think it's the Fed since last week so much. I think the markets have generally been pricing in the Fed pivot since just about the 1st of July. If you go back to that time and you trace, for example, the price of gold against the dollar index, they're virtually in lockstep, except in an inverse way. You know, every step the dollar index has taken down, the gold has risen. So it's begun. It started to be priced in back then. We can also see that back then the big GLD gold ETF started to get inflows for a change in this bull market environment. So that's kind of a sign that Western investors are joining in. So they've been pricing it in for a couple of months. We had a bit of turbulence right as the Fed announcement came that by the rumors sell the news phenomenon that we're so familiar with in the markets kind of took hold, and we had a little bit of volatility. But through it all, gold outperformed every other asset class, and unlike the other asset classes, started taking off the day after and hasn't looked back.
You know what's interesting when you see we're seeing the tension here in North America, but just this morning when I was doing my rounds of the news sources I check, I was on CNBC and Bloomberg, and there was no mention of this gold rally. I mean, there were articles about will Bitcoin hit $1 million in the next 5 years, and of course, many of these news outlets sponsored by big cryptocurrency, but no mention of gold hitting 2,600. Why so quiet on the mainstream media front, Brien?
Yeah, you know, we've seen a little bit of commentary here and there when they can't ignore it, but there's no doubt that it seems that the talking heads in the major financial media have to be dragged kicking and screaming into recognizing this bull run in gold. And that's for a lot of reasons. You know, they are so much more mainstream, et cetera. But the kinds of cash flows that the big mining stocks are turning out right now simply can't be ignored any longer. And in fact, over the last couple of weeks, I think we're starting to see what could be a seminal change in the markets. We saw beginning a couple of weeks ago the start of this rally in gold that took it from the low 2,500s to the low 2,600s. So a $100 run or more over the last couple of weeks. And that run has been accompanied by an outperformance in the GDX, big mining share index, which obviously is one of the best proxies we have out there for the gold miners. So the gold mining stocks are starting to outperform gold. That means the Western investors are coming into the sector. And that's the next leg of this bull market, I think. And that's where the real profits can be made by those investors who now have what I think is an open window, but a rapidly closing window to get involved at these relatively low levels on the equities.
On the equities?
Yes.
How about on the physical? For someone looking to step in physical
I think
here.
it's headed much higher. I think it's a different story. If you buy physical, I think you're buying the metal as insurance. And the time to do that is always now, because you know that your home currency, whatever it may be, is going to buy less in 3 to 5 years or longer than it is today. So you can lock in the current exchange rate for your wealth by buying gold now and insuring against that kind of inevitability. So that's why you buy the physical metals. Now, the other side of the coin is when you buy the metals as an investment, when you see that the macro picture is arguing for a steeper price uptrend for the metals, that they're
Hmm.
going to start outperforming everything else, then you want to find a way to leverage those moves. And that's why you get into the mining stocks and other associated investments that can provide that leverage to the underlying moves in the metals.
Yeah, really well explained, Brien. So, we've seen banks now revise their forecasts higher when it comes to the gold price.
Mm,
Bank of America, ING saying, this rally is just getting started. Bank of America, I think, now forecasting $3,000 gold easily. I mean, talk of $3,000 gold, you hear it.
yeah.
So what are you sensing? Where could you see this price going?
Well, where I see the price going and the timing are two different things. The timing is always tough. And I've been in this business long enough that I know better than to give both a price forecast and a time. But
Yeah.
$3,000 is thereabouts. $3,000 is kind of the upside resolution for that big cup and handle that we saw and traced out by the gold price over the past decade or so. Now, beyond that, I think we actually are going much higher because if you look at the three major bull markets as I defined them in gold, since it was became freely trading in the early 1970s, you have the first half of the 1970s when it went up about 6 times. You had the second half of the 1970s when it went up about 8 times, and it performed similarly in the 2000s. So if you look at those kinds of performances and you look at the bottom for this cycle being around 11 or $1,050 or thereabouts, then you're talking about an upside for this bull market of anywhere from $6,000 to $8,000 in price. I think that's where we're headed. How long it will take, nobody knows, but that's where we're headed. And you can be confident at this point, I think, in the trend, uh, and you just want to be involved in the sector.
You brought up a very good point before that our purchasing power keeps diminishing.
Mhm.
And I'm sure you've seen people state that the rise in the gold price is more telling of the decline of the US dollar. Can you talk a little bit more to this point, Brien?
Yeah, fiat currencies, the dollar being the dominant one, the global reserve currency, they are decelerating and their purchasing power is depreciating at a variable rate. And we've seen over the last couple of years of higher inflation that even by the government statistics, that rate started to rival the levels that we were getting in the 1970s, or at least the early 1970s. It's all a result of the printing of more dollars. Now, there's some very sophisticated analyses by some really good friends of mine, very smart people who look at the Fed's actions, central bank actions, and can really get into the details of why sometimes it's not quite as dramatic as it was in the 1970s. A lot of the money that's being printed is parked to the Fed, et cetera. But the bottom
Right.
line, I think you can get from the federal debt in the U.S. and see how that's rising because that kind of deficit spending is wildly out of control. Every dollar of that spending is being put into the economy and cheapening every other dollar out there, whether it gets eventually into bank reserves or not. It cycles through the U.S. economy because it represents government spending and deficit spending. Those factors are accelerating now to the point where every dollar that we pay in the US to service that debt is in turn borrowed and in turn contributes to the debt itself. So even the US is in a classic debt spiral that even for the issuer of the world's reserve currency is starting to have an effect. And it's not just a
Mm.
dollar story, it is a fiat currency story. So gold is appreciating and safeguarding value against the depreciation in all of these currencies. Those trends, I think, despite the fact that the rate of inflation is dampened a bit in recent months, I think we're going to see another spike in that because of these other factors with debt and devaluation of the currency. So it's going to happen, and it's incumbent on every investor, every saver to protect themselves from this inevitability.
Brien, let's talk about the Fed. I mean, I have George Gammon coming on right after you, and I
Yeah.
know he's been very vocal about how the Fed has made a huge mistake with its 50 basis point cut. I want to get your reaction to that cut. Were you surprised? And what's your take on what the Fed's doing here?
Yeah, I was surprised. I shouldn't have been really because the futures markets increasingly, as the decision was about to be made, were increasingly moving in favor of a 50% or 50 basis point cut. So that means it was leaking out to the favored actors in the market. Uh, yeah, I was surprised. I think it delivered a message that the Fed did not want to be delivered. They thought that it would be cheered by the markets, and initially it was. I think as the black box algorithms read the decision, read the statement, the immediate reaction was euphoric. All the markets rose. But as the day wore on, and as humans actually went and interpreted it, the reaction was, what does the Fed know that we don't know? What are they worried
Exactly.
about that they would have, initialize a Fed pivot in such a dramatic fashion? And I think they are worried at a few things. I think they're worried about the employment situation. They are worried about the return of inflation, but not as much as they are for a potential slowdown in the economy and a potential recession.
Does that make you more worried, Brien, you personally?
No, as a gold investor, somebody who is uh, invested up to my ears in gold and mining stocks, I am actually heartened by their concern because gold is in a perfect situation. I was quoted by major financial media last week by claiming it was the all-weather hedge right now. If we get a soft landing or a no landing in the U.S. economy, then the Fed, having turned to easier monetary policy, will help all assets, equities, bonds, and gold will do very well and will keep up with every other asset class. If we go into a recession, however, the Fed
Yeah.
will have to act more urgently. And one thing that we've seen in recent weeks is that the stock market, the US stock market, is definitely afraid of a recession because the stock market still has very high PE multiples, is priced for perfection still. So a recession is going to send that cratering. In contrast, a recession would imply more urgent action on the Fed, much easier money, and gold and associated investments are going to soar. So it's hard to see a scenario ahead where gold and mining stocks don't benefit.
Uh, the Fed gave gold investors a gift,
Absolutely,
in a sense,
they
Brien.
absolutely did. I think there is something they see that they want to be a bit more proactive in easing, and the reaction has been great for gold so far. It hasn't been that great for other markets.
Let's talk about the upcoming election.
Yeah.
Uh, more specifically, more specifically, uh, I caught the recent comments by billionaire John Paulson,
Mhm.
who said if Harris were elected, he was talking to Fox Business. He said, I would pull my money from the market. I'd go all into cash. Sorry, I'd go into cash and I'd go into gold. What
Yeah.
did you make of his comments here?
Well, he's a smart guy, and is evidenced by the fact that he's already into gold and he's already into gold mining stocks heavily. So he's one of the smartest investors out there, in my opinion. And he
Yeah.
makes a very good point. I think his point may be a bit more political than I would make. Yeah, I think Harris would be terrible for the investment markets. I think it
Mm-hmm.
would be harder for equities, and therefore gold would shine in comparison. But I don't think Trump is the savior of the markets either. I don't think either candidate is going to do anything to stem this tremendous level of deficit spending that we've been seeing. It was not even an issue. I think it is the most important issue facing the markets and the economy in the U.S., but it has not been mentioned at all by either candidate, either in the
Right,
debate
right.
or in any public pronouncements. So neither one is going to do anything to stem the tide. And frankly, I think the situation is beyond curable at this point anyway. No one is able to address the biggest spending items in the budget, being the entitlement programs, and they can't make a real difference any longer. So many programs are on autopilot, and anyone that would try to address those issues would not get elected or reelected. So it's just not going to happen.
Yeah, I mean, this you raise a very solid point here, Brien. I mean, if no one can save it at this point, or even attempt to save it,
Hmm.
then what's the outcome? I mean, where do we go from here?
Well, I think what you need to do, as I said, is protect yourself with gold and silver. It the outcome is clear. The timing is the part that's still hazy. We don't know whether it's going to be this cycle of boom bust that's going to uh, uh, strip away whatever remaining credibility fiat currencies have. We don't know if it'll be the next cycle after that or the cycle after that. So that means it could be 3 years, it could be 30 years, but the trend is here, and I think we're in the end game of that trend. So increasingly, we're going to see the currencies depreciated, not as a matter of strategy, but as a matter of that they'll be forced to. They'll have their backs against the wall, and they'll have to depreciate the currencies because of the size of the debt loads. People ask me what Chairman Powell should do, and I tell them he should grab his briefcase, walk past his secretary, and head for the hills. I would run because there is no way out of it. It is a classic debt trap with no escape.
I mean, do you almost need someone like a Malay, and I'm not saying Malay himself, but to come in? I mean, the
Yeah,
drastic measures at this point.
yeah, you do. But who would have given Milei a shot in Argentina? But he did, and I think that is about all the luck that the world uh, can hope for at this point. There's no way we would get that type of a candidate elected, in my opinion, in the U.S., and they certainly wouldn't get reelected. There's just too many constituencies that are dedicated to continuing the status quo.
I have to agree with you on that one. Brien, you talk about this, and your speakers at your conference are among the best. Tell us about your upcoming New Orleans Investment Conference. I mean it. It's one of the best shows out there.
Thank you, Daniela. It is exceptional in any year. We bring in the top speakers from around the world, but this year being our 50th anniversary, and quite fortunately and coincidentally, in the very beginning stages of what I think is a secular bull market in metals and mining, it is, I think, frankly, a can't miss event. We have great speakers from James Grant, we have George Gammon, we have Brent Johnson, we have Rick Rule, we have Peter Boockvar, we have Danielle
Yeah.
DiMartino Booth, we have dozens and dozens of today's top
Yeah.
experts. I really encourage people going to our website at neworleansconference.com to look at our speaker roster. It really is a can't miss event at this point in time, especially.
Absolutely. I encourage everyone, if they can, to attend. And most of the people you named, I think all of them are great friends of our show. So, Brien, congratulations on the 50th edition of the show, and continued success. Please come back soon.
Thank you, Daniela. Whenever you want, I'd love to be on. It's a great opportunity, and you do such a wonderful job. Look forward to being on next.
I appreciate it. Who knows? Next time, maybe gold will be 3,000 when we're speaking, Brien. Who knows?
Depending on the timing, I think it's going to
Yeah.
be there, but who knows when.
All right. Brien Lundin, editor of the Gold newsletter. Get that as well. He doesn't just run a great show. He also puts out some great work that you could read. highly encourage everyone to do that. Brien, thank you again, and thank you all for watching. Don't forget to sign up at danielacambone.com to stay on top of all these great interviews, and subscribe to our channel so you never miss one of our videos. Thank you so much for watching. We'll see you soon.